Welcome to Money Discourse. I'm wearing my Christmas jumper to see if I can get Santa to come back to us, because right now it seems like he's in a ditch in Lapland, hungover somewhere. But Chris Kringle, can you hear us? We need a rally. I need a
I'm
rally.
just wearing. I'm wearing
Tesla
a red
can't.
jumper because all I'm seeing is red right now. So it's
Yeah,
just, oh gosh.
Tesla can't catch a bid right now. It's in free fall. Some blame Elon's antics. Elon blames the Fed. Rajan, what's going on?
Oh. To say that this, I mean, it's a really weird one because we were talking about in the last pod how important the CPI print was going to be. We had a great print and we had an initial massive rally off the back of it. I think, the NASDAQ was up almost 500 points on the back of it. We came in at 7.1 against 7.3 expectation, if I remember correctly, or 7.4 expectation. And all the metrics were looking good, although underlyingly there was some services inflation, which some people did point out. But just generally, the trend is down. And we've gone from a peak of above 9 to now just above the 7 mark. And I assume it's going to continue lower and probably hit into the 6s. So, and we're seeing a lot of this. We just saw a report out of Redfin today that November house sales were down over 30% year on year. And it's the worst decline since 2012. But yet, despite these signs that inflation is going down, the Fed have just been so aggressive with their rhetoric. All of the, so many of these members are coming out, and so what happened is that we had a decent rally on the CPI day. The next day we had the Fed. The Fed raised rates 50 basis points as expected, but what they did was raise their terminal rate. The dot plot had the terminal rate now push up to about 5.1%, which was higher than it was prior. And that higher terminal rate is what just tanked the markets, absolutely bludgeoned it. Then on top of that, then you had the Bank of England the next day, the ECB. The ECB was quite hawkish as well. So we had hawkish ECB, we had hawkish Fed, despite that inflation number. And we continue to see hawkishness at the Fed in all the various remarks following this rate decision. And that has really put a damper on the mood in these markets. And from what looked like what was going to be a great, potential year-end rally has ended up, we're sort of pushing on to one of the worst Decembers in a long, long time. In fact, at one point today, when the NASDAQ was down over 450 points and the S&P was down over 100 points, we were down almost 10% on the month for December, which is just wild. But we have come off the lows, and just checking now, the NASDAQ finished today down just over probably about 2.5%, almost 3%, but it was better than it was at one point. I think we were down 4% at one point. The S&P down 58 handles, having been down over 100. The Russell was down about 1.5% as well. So we had a nice comeback in these markets. A lot of the stocks did come back, but not Tesla, because Tesla has just been it's just been horrible. I don't know what's going on with that, but we'll talk about that in a bit. But just wanted to look at show you the various Decembers we've had dating back to 1957, and we had a 5% decline, but we had a bad decline back in 2018, but that did reverse quite sharply. And as of yesterday, we were down 6.4% for December, and as I just mentioned, that we were down 10% at one point, which would have marked it the worst December since 1957, basically, since this chart was around. But we did come back a bit, so we're still down probably close to what we're down in 2018, but we've got about a week left, and I don't know how that's going to all play out a bit, but it doesn't look good. But if we just look at the chart, look at what the chart is telling us right now, and again, we had this nice bounce in November, and then since then we've just been slowly coming off. This was, I think, the Fed day when we came off from the Fed on the back. So this was the CPI day. The Fed day, we had the reversal, and then this was the ECB day where we had that huge, huge decline. And today we had another big decline. But we can see we finished about halfway up the candle for the S&P, which is positive, having been below 3,800. But again, we're still in this at the upper end of the range, so we can still push back towards the lows of the year, which is 3,600. So hopefully that don't happen. But it ain't been pretty. It's a lot of the growth names have been smashed again, and that has been a problem since a lot of my portfolio has been growth related names, and that has been very, very painful. Ain't been fun. Ain't been a good December so far. It's just not been good. What do you say? How you seen it on your end?
Yeah, so if you look at the 10-year, the risk-free rate that drives stock valuations has actually fallen since October, but we're just still getting a massive, especially in Tesla, it's just been absolutely insane. I mean, if you today, 190 million shares were traded on Tesla versus 80 to 90 million that normally get traded. So now we have to think about it. What is causing this? Could it be tax loss harvesting? It seems like if it's this type of volume, it must be some kind of large institution that's liquidating. Elon has obviously been putting up these Twitter files, which, when you think about it, they're really kind of damning to the FBI, the Pentagon, all of these government entities, and all it takes is someone from higher up to really just give a call to one of the major funds and say, just liquidate Tesla. As
the biggest thing was yesterday. Yesterday we had a huge rally. We had over a 60 handle move in the S&P, big Nasdaq move, and Tesla was flat on a move that big. It did not participate at all. In fact, it hasn't barely had an update in just over a week. Bear in mind that just after the CPI number, Tesla was about 181. It's 125 now. So literally in, I would say, 5, 6, 7 trading days, we've come off about $56 from the high, which is insane. That's almost a 30% drop in 7 days. So, I mean, that's some big, bear in mind, at that time it was a 600. We've lost 200 billion in market cap in 7 days.
Yeah.
So there is, like you're saying, with that volume, there is some serious size. So, like you said, I could imagine a headline tomorrow from just reading one of these Twitter comments is like, hedge fund, insert the name, was forced to liquidate their Tesla position today because of margin issues or whatever issues they might have. So you either got a big hedge fund liquidating, or you might have Elon selling more and more and more. Now, I was going to discuss this with you.
He can't sell.
He can't.
So it's not him. It could be potentially his foundation, maybe. I'm not sure. Obviously, today there was an announcement that Tesla is adding on for the next 10 days a 3,750 additional discount to the existing 3,750. So it's basically 7,500 discount that they're giving, and it's actually much better than the 2023 EV tax credit, which, if you do claim that, you can't actually get your money back until 2024 April, right? So if you buy a car on the 1st of Jan, you won't be able to get it back. So this is actually a much better deal, and you get 10,000 free
miles,
supercharging miles, which obviously adds up, especially with electricity prices being high in some regions. Now, it seemed like the market initially in pre-market took it, like neutral, and then literally as that market opened, we just saw massive selling off, and it's just insane. Like this type of drop. Have you seen a mega cap drop like this?
I, honestly, apart from Facebook, but see, Meta, should I say? But Meta drop was related to earnings, right? But this drop, the fundamentals haven't changed since last week. In fact, the fundamentals are strong. But Elon, like the thing is that we've seen a lot of spat talking about. Elon now arguing with some of his investors like Ross Gerber and stuff like that. But yet he's gone full hog ahead with this Twitter files and just constantly, I don't know, just being so preoccupied with Twitter that I don't know if investors are losing their focus, their patience or whatever with Tesla. But the thing is, the drop that is happening, it's as if it's like a targeted mission to try to get Elon to puke, like I was saying before. Because I was thinking this, right? So I don't know what his net worth is right now, but with the Tesla shares that he currently has, which is roughly about 13%, having the market cap now dropping to about 400 billion, his Tesla shareholding is probably worth about 55 billion. Then add on SpaceX, add on a bit of this, which is illiquid, but let's just say it. His net worth now is probably less than 100 billion, 80 to 90 billion. So when Twitter was initially at the time of his purchase, around 20 to 25% of his net wealth. Now it's 50%, if not more. And in terms of his liquid net wealth, it's probably almost 1-to-1, close to 1-to-1. So I don't know how much debt he continues to have in Twitter, but I feel like there's this targeted agenda to just squeeze him so much that knowing that he's taking this purchase, which realistically has got to be the worst purchase of all time in terms of price. I can't imagine. We've had some bad ones like Square buying Afterpay for 29 billion. I remember back in the day, RBS buying ABN AMRO for 57 billion. But the thing is about all these purchases, they were on a company balance sheet. And what did it do? It messed up a company maybe. But this is like on Elon himself. And at the same time, I was saying that he would need some investors. But the thing is, how realistic is it that he can bring investors on board at the valuation he paid. He's going to have to mark it down, maybe even 50% lower realistically, because that's all Twitter is worth, considering the loss of revenues that he's had. And the thing is that, you know, a lot of people appreciate what he does with all of this free speech and this and that. And, you know, maybe it is a noble thing, but
at what cost?
You know, what is at what cost? Exactly.
Yeah,
and what has he gained by doing it? Like, what's the moral high ground? But it could absolutely ruin him, you know?
And us as investors that have supported him. We see his vision with sustainable energy, the vision to get to Mars, tunnels, all of these things. We see all of that. But what we didn't sign up for was this whole Twitter drama. Like, I understand. The thing is, he hasn't clearly articulated what this woke mind virus that he's fighting is. So how can we all get behind him? How can there be a thesis? It just seems like we're saying, since he started taking this Wegovy, he's just on this massive tear, doesn't care. Like, he's so singularly focused. It seems like he's been hacked in some way. And he's replying to all these tweets with all this conspiracy stuff, but like, how is he validating that these things are fact or not, you know? And one of the other things that I think about is, look, in April he did an initial deal with Twitter, right? So and it closed in October or whatever it was. And in that time, if there were any files that could have incriminated any of these government agencies, wouldn't they be like, hey, can you just wipe those away? Can you just delete all the information about that or something, like, you know, just get rid of it if they didn't want it? How does Elon know that all of this hasn't even just been planted? You know, like, he's fallen into a trap. And the thing is that he thinks that he's doing the righteous thing. It could be for humanity. I understand if when you look at tools like GPT and how AI is kind of being trained on the Twitter data set, you know, but literally all the tweets that are out there, if it's being trained on a very kind of left-wing bias, then that's how AI is going to think. And obviously he's trying to get it back into the middle, but the way he's doing it, we just can't understand. Like, how is he going to fix it by just tweeting all this other stuff and alienating his core supporters, right? You know, like, a lot of them, diehard guys are now just like, we don't know. I mean, obviously, I'm very much behind Elon in all the things he does, but I just don't understand right now what he's doing with Twitter. And, you know, a lot of the people, still the diehards, will say that Elon had nothing to do with this Tesla fall. You know, it's just all macro, and, you know, in a recessionary environment, you'll see declines in their sales, and that's what the stock price is just kind of reflecting. But if you look at since October 1st, Tesla's down like 51%, whilst the Nasdaq is down 3%. So you would have seen more of a correlation in the index as well as Tesla during that time period. But you don't. So this is the crazy thing. I mean,
it goes back to what I'm saying. Like, this whole week, there has been someone liquidating or some entities liquidating, because the correlation to the Nasdaq is virtually there is no correlation. I mean, we're not having. You would expect with the type of move down at some point you'll see a big snap up day, like a 10% up day or something like that. It's just not coming. The thing is that every time it's up a little bit, they just smash it lower, and it's like someone is unloading a boatload. And I mean, you know, it is just the biggest story right now. It's just what is happening, who is doing it, and did he ruffle the wrong feathers? This is the thing, you know, like, sometimes you just can't go against the government. I saw someone say that, like, Elon has been doing that whole poll about whether the spending bill, the $1.7 trillion spending bill, is it worth it? You know, done a Twitter poll, and then he wrote a message to, I think, Chuck Schumer, saying, hey, the people have voted that they don't want to do the spending bill. And then next thing you know, they go, the spending bill has been agreed. So what's the point? What's the point? Like, they're going to do it anyway. You just wasted all these resources. You're doing some poll. You're doing this type of thing. You're doing that. Like, the government's going to do what the government's going to do. The thing is that the people don't get a say, really. You know, they bipartisan agreement to this bill. You know, a lot of it's full of fluff here and there and stuff like that. But whatever it is, it is. And the thing is that a Twitter poll ain't going to go say, the government ain't, you know, you're not going to see all these members of Congress go, ooh, that Twitter poll, yeah, we better rethink what this agenda is. And well, this is what it is. And I think, yeah, it's just really puzzling, especially if Elon can't sell. Now the question is, I'll be shocked if there's an S4. Like you said, he can't sell, considering that earnings is coming up. But you know, if it's him that is selling, then that is a real red flag, to be honest with you, because for him to keep on divesting in stake like that, it just seems like, I mean, it's just, first of all, it's diluting the stock a lot. Second of all, it's like, when is he going to stop? Because Twitter ain't going to turn to profitability anytime soon. And especially the rate at which he's going, you know, sometimes to do a business, I guess what we've learned from this whole escapade is that you have to sometimes go against the free speech to get the business on board. If you want to maintain your business, rightly or wrongly, whether you agree or not, whether it's the right thing or the wrong thing, you know, when 50% of your big money leaves, what do you do? Sometimes this is the problem. The corporation is too powerful. It is too powerful. And they do dictate a lot of the rhetoric sometimes in a sad way, but it's been like that from the beginning. You know, we've seen so many documentaries about it.
Yeah, and the trailing P of Tesla right now is around 38, right? And you compare that to Walmart, which is like 44, and you look,
Walmart, wow.
Yeah. So, and I mean, it's lower than Costco. Costco is lower than. It's just insane how cheap the stock is relative to its projected earnings and even existing earnings. So, I mean, if I don't think
it's amazing because you say that, because you just hear too many people, so many people, like both sides, relative to where it was, it's just phenomenally cheap. But at the same time, people are going, it's still way too expensive. It's still worth more than all the other car makers put together. Ford is trading at 5 PE. All these other car makers are, you know, trading at this, and it's going below 100. It's going to 80. It's going to go more in line with them PEs. And the thing is, that whole Tesla bull argument has been, it's not a car company, it's a software company, and it's got so much coming up and this and that. But
it's got no debt. It's got no debt. Whilst
there
with the other guys, they all got a lot. They're encumbered with a lot of debt. So you know you have to take that in. And also in terms of growth of sales, to be honest, that whole argument. I mean, I don't think even if you could say to everyone, no one cares right now, because it's just there's forces outside of retail that are moving the stock right now. And I mean, I've been selling on the way down, trying to get out of some of my position because I got put into a bit of margin from some puts that were sold that were way, you know, into next year, and then I got assigned on those, so I had to sell out. But I did buy a bit today, so yeah, I mean, but who knows if it's gonna go lower? Probably, most likely, it's gonna go lower. Let's just see.
You know what it is? I mean, it does seem like it doesn't want to do anything but go lower. But I would love to see one day what I'm looking for with Tesla. As is the overall
it's going to be a rubber band. What's
going to happen? You're just going to have another day where it's down another 10%, a bit like today, and you're just, oh god. And then sometimes you know, some people are just like, I've had enough, I'm out. And then next thing you know, it just pings back up 10-15%, and that is what I'm looking for a short-term bottom. I mean, in terms of the market as a whole, I still. You know, like, this is the problem with the market as a whole. You know, today we had, I'll bring it up actually. We had strong data. This is the problem. This economy is just so resilient right now. And I think it's annoying because we had a GDP final that was revised upwards, but obviously that's lagging data. But if we just look at Forex Factory right here, we had the unemployment claims actually come down, which was lower than expected. But the thing that really ruffled the feathers a bit was the final GDP price index, which was 0.1% higher. But we also saw comments from David Tepper, who's the the founder of Appaloosa Management, one of the most successful hedge funds, which has a huge background in calling the Fed correctly, and he just seems very bearish. And the thing is that he just says it how it is, and often. He's one of the most successful hedge fund managers. He was on CNBC this morning and was talking about it. And he's leaning short. Of course, he's going to buy. He's a hedge fund. And he goes, you know, there will be stuff that I'll be buying, but I'm leaning short going into next year. And I think that also had an underlying weighting on this market as well. But again, we did rebound, which was positive, that there are some buyers out there. But again, Tesla is a different story. And I do not believe, like Elon is saying, it's, of course, the recessionary impact is having the effect on the stock, but you don't drop 30-something%, because we already knew this mantra about the recession, about the Fed raising rates. That's been the same mantra for the last 5, 6, 7 months, right? But I mean, to have a drop of over 30%, there's something else. On our next pod, who knows? We might know what the cause was. Did someone liquidate? Someone busted out? Was someone overly leveraged?
Looking at some of our previous theories, if it's SBF, you know, they've mysteriously found $1 billion of assets. So you never know; they might have to liquidate that.
Thing is that now he's SBF has been granted bail $250 million, so he might have to sell a few more Tesla shares if he's got it under the pillow.
Yeah, but actually, with that, apparently his parents just had to put a lien on their house, and someone else, some other family member, had to just put a lien on their house, and that's it. So they didn't come up with 250. But I mean, there's so many different things that could be causing it. We don't know. But if some of the value investors out there, like Warren Buffett, or even if Apple wanted to come along, they could just buy for like 25 billion, 5-6% of Tesla right now. I mean, to be honest, any company that really wants to get into full self-driving should just look at it as a potential buying opportunity. The thing is with Tesla, they can lower their prices like they're doing right now and take more market share. So that's I've been thinking about it. Should I just sell out? Should I sell out? And the fundamentals are still there. So yeah, like you said, just waiting for that potential bounce. Yeah.
I think what the biggest thing is, like Ross Gerber said, it's the main thing is that with any company, we can see companies that have huge multiples that all contract. Management is key. People look at management. There was a huge Elon premium. Right now, investors see huge instability in management, and that they don't have a leader at the helm to steer the ship. So investors, in my opinion, have lost faith in management, i.e. Elon Musk. So regardless of whatever they can do in terms of car sales and this and that, if they don't have the right management guiding them through this process, then investors are just backing out. And clearly that's what it seems to be. And the thing is that with Elon, if you think about it, the amount of stress he must be under, first of all, seeing his Tesla holdings, the way that has happened. On top of that, the problems he's got at Twitter. And right now, you can just tell by his replies, he's just becoming more agitated and this and that. I can't even imagine how stressed out it must be. And in a way, one of those tweets, did you see the one when he goes, if you're stupid enough to lose your life savings and you're willing to, that one he did, sort of tells you where his headspace is at. And
yeah, I mean, there was a Twitter Spaces that he was on just a few days ago, which I was listening to. Yeah. He did iterate that, he's cut down cost a lot, and he expects it to be cash flow, or Twitter to be cash flow neutral sometime next year. So hopefully he's sold enough shares to kind of get enough funds to just at least tide him over until next year. There was a famous developer and hacker, George Hotz, who joined as an intern, but then he wanted to refactor the whole of the Twitter code base, whilst Elon was, he's trying to push for new features, and you can't have both. But like literally, the way that Twitter has been coded is just terrible. It's like a 1.3 gigabyte tarball, which is like to create new features, you have to all do everything on production. Which anyway, it's just a big mess. And the thing is, all of the things that need to happen is going to take time. So it's not just a quick, like, oh, let's go in, let's modify a bit of software here, and okay, we've got this new feature, It's literally a pain in the ass, and so much legacy code is just all together in this really old, haphazard fashion. So I don't see things getting better for the platform anytime soon. But he has cut enough, he's cut 75% of the staff. So, and I think he gave them 3 months of severance. So I think that obviously chewed up a huge amount of cash. Now, once that all kind of dissipates, I think, hopefully, advertisers start to return and he can make something off this $8 a month subscription and just get it back to normal, and then just come back to Tesla, because it seems like that's where he's needed most.
Well, that's where the market needs it most. Like, it seems like Tesla could probably run itself quite well without Elon, to be honest. But the thing is that if that is the plan, they need to sort of communicate that to the market, because the thing is, there's no communication on like who's running the day-to-day ops while he's on Twitter. Because it seems like now Tesla's got to that phase where, it's got a good operation going, they've got the right staff and everything, but it's just the way it's communicated right now. It's just it's him AWOL, and so the market don't like that.
So just one point about how the total US inventory has kind of like dropped on Tesla's since the discount was announced, has like dropped dramatically, because there was like literally hundreds of cars available on inventory orders, and from this morning, like I can only see like 4 or 5 in each region now. So it seems like they will be selling pretty much every car that they make right now. They will have to keep a discount, maybe like the keep
Yeah,
the
because I saw this.
3,750
Yeah.
discount plus the because if you look at it right now, even with this discounts of 17
It's 10%
7,000,
higher than last year.
yeah,
That's
exactly,
what I saw.
yeah. So the thing is, and if Elon's seeing deflation, right, and the cost to manufacture these cars is going down, hopefully, fingers crossed, that margins aren't going to suffer that much. And if margins are suffering, at least they're taking more market share, because it seems like all of these other automakers are rolling back or like slowing down their EV programs in this kind of environment. So yeah, let's see. Anyway, that's a lot about that.
Well, that's about Tesla. Just a couple of other things that does give rise to optimism, but again, it's not what the Fed wants to see. Like, we actually saw earnings out of Nike, and they were up like 12% yesterday because they had some really good earnings. They reported over here at 93 cents, and revenue also came in ahead of consensus, and they affirmed their outlook. Now, I was mentioning last time that the sales here were insane. Like, the markdowns on especially sneakers, the trainers and stuff were just incredible. And so I was expecting a huge margin contraction in like some of these apparel makers. But with Nike, they only had oh, sorry, where was it? So I went too far down. So yeah, here it is. So they only had a 300 basis point margin contraction. So actually they reported 85 cents, which was a 20-cent beat, and revenue was also well ahead of consensus. And their gross margin was 42.9%, which was down 300 basis points year on year. But that is not that much considering the amount of discounts there were. So I'm looking forward to what Adidas come up with, because they were literally doing 50, 60, 70% off theirs, a lot of their trainers. So it will be interesting. But the inventories are still high, 9.3 billion, which is up 43%. So I think a lot of their discounting ain't over yet. But so Nike definitely had some good results. And FedEx, after the disaster last time, they had some decent results as well for EPS and revenue. EPS was well ahead of consensus, but revenue was slightly behind. But FedEx did react positively to it. There was actually a story in regards to Amazon where Amazon are continuing to cut costs, because Amazon is another one of those dogs that have just, it's falling to the lowest it's been in like 2.5 years, almost 3 years. And then this morning we had a headline that they got further cutting costs further in anticipation of a severe economic downturn. So there was a report from Business Insider. So this was something that, I mean, could have also helped a bit of the market downturn. I mean, but this is what the Fed is trying to do, right? So again, I don't know, it's Amazon's doing this, but also they also noted that they couldn't fulfill all these orders, and they had to do more and more of their orders. They had to give it to USPS, FedEx, and UPS to fulfill. So I think that you would see some gain out of them delivery companies. Yeah, so it's a definitely. I mean, this is what the Fed wants. The Fed is trying to tank this economy. It's much harder for them to do it than it's happening now. But it seems like Elon is predicting this massive recession. Amazon's predicting it. A lot of the economists are expecting it. So let's see. I mean, next year could be a bit of a rough one. But I don't know, if this happens, then that will get the Fed to sort of lift off the accelerator, and that's what the market wants. The market will always lead. So I think we'll definitely get a rally if the Fed's wish comes to fruition. But yeah, we'll see how it ends up for coming up to the end of this year anyway. So it's been a bit of a rough end to the year, let's put it that way. I was doing pretty all right until this last week, where I've really been hit, especially from Tesla. But nothing you can do, eh?
Yep, when you
apart from sell it. Yeah. No, I mean, what I'm looking for is just not the everyday 5-10% drop. Like, even if it can just stay steady for a couple of days and just not move, even if it stays at this level, but it doesn't drop enough. It's just the rate of decline, which is just the hardest bit. It's just because it seems like every day is some gigantic. It's not a 1% or 2%. It's 5, 6, 7. Today it was 9 or 10 or whatever it was today. It's just relentless. It's just maximum pain right now. And then sometimes when the fundamentals haven't really changed that much, but you've seen it go like this, and but my fear is just how much more multiples will continue to contract, if at all. And if they do, then yeah, it's not going to be good. But we'll see.
Yeah. Well, thanks a lot for listening. Yeah, we're getting a lot more engagement with our videos. So if you just can hit that like and subscribe button, it will really, really, really be appreciated, especially with our portfolio setting so much. At least we can get smart out of your. And comment, tell us what you like and what you want us to discuss in the next video.
Yeah. Merry Christmas or happy holidays. Enjoy with the family. friends, whoever you're celebrating, or if you're not, it's all good too. And yeah, we'll catch you on the next one.